You can live on $94,050 of capital gains a year without paying any taxes. If you're like me, this is something that you see on social media all the time. And you might think, oh, that's so awesome. In 20 years, I'm going to retire, I'm going to sell some capital gains, and I'm going to pay no taxes. Part of this is true. So the true part is that you can live on $94,050 of capital gains entirely tax-free if you have no other income sources. In fact, you can actually live on that plus $29,200 more because that is the standard deduction today. So that means you could actually have $123,000, a little bit over, in capital gains and pay no income taxes. The problem is most people hear this and they're like, oh my gosh, I make $80,000 a year. I could just sell that and pay no taxes. But at the end of the day, all of these get combined together. So let's say you have $80,000 of income and then you have the $120,000 of capital gains. Your total income is $200,000 and you're gonna have barely any capital gains at 0%. This is the problem and the thing that people mix up all the time. And so they look in the future and they're like, great, if I just have some investments, I'm going to be able to just sell that and pay no tax. I'm going to live this really great life. But at the end of the day, that's not what's going to happen, right? You're going to have some Social Security. You're going to have RMDs from pre-tax accounts. You're going to have taxable interest from cash. You're going to have dividends from your investment account. All of that is going to be combined together. And what that's going to end up doing is it's going to push you out of this 0% capital gains bracket. So let's look at an example. So today, I just talked about this, right? You can have about a little over $123,000 of capital gains without paying any taxes. But let's add in some other things to make it more of a reality. So let's say you're holding cash and you have some bonds and you have taxable interest of about $40,000 a year. And then let's say that you have about $20,000 of qualified dividends that comes from your investment account on a yearly basis. If you look at this tax report, you'll notice that you still pay a very small amount of tax. You only end up paying a little bit under $6,000 of total tax this year because you have the $40,000 of interest. That gets reduced by the standard deduction. So you're only down to about $11,000 there. And then you have qualified dividends and then you have the capital gains. So overall, very little amount of this ends up actually being taxed. So this really isn't the worst structure. The problem is that a lot of high net worth people assume that this is going to be reality for them and they're going to be paying very little amount of taxes. But when you retire and you have $5 million in IRAs and 401ks, you have $5 million in a taxable account, you are going to be getting way too much dividends, income, interest, etc. to be in this lower bracket. This was a really short video today. I just really wanted to hit on this point because I see it on social media all the time. And so when you hear about this, just remember that this does work if that's all that you had, but it is total income. So all of your income sources get combined into here. It pushes you up. And for most high income, high net worth people, that is going to phase you out of having the 0% capital gains bracket. Thank you for watching. If you enjoyed this video, please leave a like and go follow my page for more personal finance content. And as always, if you have any thoughts, please leave it in the comments below, and I promise to get back to each individual comment. See you next week.